This is the MTPredictor weekly market update for January 13th. Well, as you can see, I've put the three markets, the weekly charts here, the NQ on the left, the S&P mini, and the Dow here on the right, because I just want to compare and show you kind of what the situation is here. So let's just take the S&P here. You see I drew the little line here, and you can see that the price has poked above that previous high there. We'll look at it more in detail in a bit. Same with the other markets here. But you can see it's the only market now that has made a new high over the this last swing high here. Here's your NQ on the left. You see there was a decision point sell signal there, and that sold off from there. It has rallied a bit here, but you can see it's still not has not been able to take out its prior, which we'll see is going to be a wave 5 high here, or prior swing high if you want to just leave it at that. All right, so you've got the S&P, which we call the boss. It's the most liquid. It achieved a new high there. NQ has not. We look at the Dow, same situation in the Dow, similar to the NQ. The Dow also struggling, has not made a new high or taken out that prior swing high. Again, we'll see it's a wave 5 high. DP sell signal there. And so when we have this divergence, if you will, these markets are not in agreement yet. Now the ES, like we talk about being the boss, may pull the other markets up with it, and we may see new highs eventually in these markets and confirm the S&P's move here. Or these other markets will just not be able to do it, and the S&P will exhaust itself up here, and everything will roll over. That remains to be seen how that will play out. But I think you see, especially if you trade intraday, you're kind of seeing this play out intraday in the action, the price action, and some of the stuff that we've seen. As the S&P would try to make new highs, the other markets wouldn't follow, even intraday, and then the S&P would roll over, the Dow would try to be a stronger market. So we'll see how this gets resolved. But if we look at it a little bit closer here on the weekly chart, so we had a nice buy signal back here, a sell signal here. These were all nice, again, 5-wave patterns up. That's why we pay attention, right? In fact, this pattern was the March lows of 2009. You can see the nice 5-wave pattern down that unfolded then as a 5-wave pattern up here, which, as is typical, corrected back to the wave 4 DP. Right, at a minimum, usually after wave 5, you get a correction back to this area here. That then held as support and unfolded into this DP sell signal, which again was a nice 5-wave pattern up. Now this correction went just beyond the wave 4 DP. If I can get this on here. Right, and it ended up being a little wave 1, wave 2, and we went wave 3 down. Now this has unfolded, and this is why we paid attention again, as a wave 5. So initially we were looking at potentially this, if I expand this out here, once we went wave 5 up here, this could potentially be a wave 1 and a wave 2, but what happened, as we said, we've made a new high here which would nullify that. All right. Now, have we the high at the wave 5 high there was 1461.75. All right, the closest, well, we've closed here at, let's see, what was this? 1457.75. A close here at 1467.25. All right, so we have a close now above that wave 5 swing high. That was on Friday. Right, so that's the first close that we've achieved above this. Now the high of this closing candle at 1471.50. Right, so if they can take that high out, All right, then that may be something that where they attempt to pull the S&P will pull the other markets up with it, because that might be confirming that we're going higher to the next resistance level, which at a minimum should be this DP here, which sits around 14, close to 1480. 1500 is a nice round number, kind of at the top of the DP resistance level, so won't be surprised if they take out the high of Friday's candle that we'll see 1500. All right, and we'll have to look now at the let's look at the Dow. Again, we'll stretch this out. Again, this is a weekly chart, bigger time frame stuff, but same pattern up to this point as our S&P. Whoops. Just going to put the Elliott wave analysis on here. So you see the nice five-wave pattern up there. Here's your potential wave 1. Since this, we could call this potential wave 1 because this is a significant high. So Gann many years ago and Elliott later said, the best time to buy or sell is after a major top or a major bottom, wait for the impulse move, and then the first correction, or Elliott later said the first ABC correction, and then would be in wave 2 here, selling, being a seller into wave, the big wave 3, which tends to be the largest wave. So where are we currently? Again, failed to make a new high here, getting closer as the close on Friday, but right around this wave 2 or B, we have gotten a little close above that wave 2 or B. That high gets taken out, then I think we do. The Dow does run make a run at the new or the wave 5 high here, and probably takes that out. That's at 13,537. High on Friday, 13,436. So if that gets taken out, chances are they'll make a run at the swing high here. And but if they don't, if they're not able to take that high out, we can project down wave 3 here. Okay, and this will give us we use our first target here, which would be the typical wave 3 target. That's sitting down, what is that? At 11,006, we'll call it 11,690 area. Alright, and then to the upside, we'll take our decision point off of the wave 5 swing high there. Your next major resistance will start anyway at is that 13,006? Well, let's call it 13,700. It's close enough. Nice round number. All right, so that's the Dow there. The NQ. If we look here, again, that same nice 5-wave pattern up. Okay, the first impulse move here could be a potential wave 1, and you see we've rallied. Here's your first corrective move. Hasn't formed. Let's just project up wave 2 or B. Okay, so we're right in that area. We'll project down wave 3. If this area holds, or they can't take out this wave 5 swing high, then we project this wave 3 down here, starting at the major swing high, down to the bottom of what we look at as wave 1. Okay, and that would put the target, the typical wave 3 target here, in the NQ 2115. Again, these are the March contracts. So, and then to the upside, if they can get things going, if they take that wave 2 area out, then here's your next resistance in the NQ, sitting right around 2918 and 3,000. There's a nice round number, just slightly above the top of the decision point resistance area there, but a nice round number there. So So we'll see. We'll see how these play out. Again, if NQYM cannot take out those prior swing highs, then we may get the correction, the wave 3 down move. And that's on the weekly chart there anyway. I'm just going to take a peek at the daily chart here. Nothing, real clear pattern-wise here. But you see they're just trying to take that, this little high prior swing here, and then they've got some work to do to take out that prior high back here. Alright, let's switch gears, look at gold here. Again, gold has sold off below our 50 period moving average. Here's our 200 period moving average on the weekly chart here. Again, this little dip to the 200 period moving average back in the crash of 2008. And so here we are. These have been good buying opportunities. Again, we've gone over this a number of times. Anytime the gold, when it's in a bull market like this, as it has been for the last 11-12 years, is when it drops below the 50 period, above the 200 period. Those have been very good buying opportunities, going all the way back to the start of that bull market, basically after 9/11, if you will. So we've got that same situation here. In fact, we've got a weekly buy signal. The STF is blue. It's a standard trade setup. If gold would get to a 1678.90 with a stop at 1625.90 with a target at just above 1800, 1803.80. All right, if you achieve the 100% initial risk line at 1731.90, you can move the stop to break even at 1678.90 for a risk-free trade. So that's a setup on the weekly chart in gold. We'll see if that ends up getting it becomes an executable trade or not. Silver. Let's see. Where's my silver chart here? Let me just do the. Alright, silver here on the weekly chart. Same basic setup here, the TS3. Now, we don't look at silver the same way as far as the moving averages and stuff, because it's a much more volatile market, smaller market. But there's a pattern here anyway that's, let's see, along there at 30, I'll call it 30.96, with a target of 35.67, with a stop at 29.23. Again, it's a standard trade set. The STF is neutral, meaning the bigger trend is flat. But here, the problem that we're having here, you can see I drew the little pennant or triangle here, is we initially broke this and we had some nice swing trades off of that. But you see the succession of lower highs here, even this little B swing here, all lower highs. They haven't been able, if silver's going to rally again, it's got to take out and start exceeding these prior highs. If it can't do that, then the break may be to the downside here. And we could see that gold pull back like we saw in 2008, back to the 200 period. So watch the gold market. It'll give you a little better idea of what's going on with silver as well, as far as that goes. So anyway, we'll see how if these become executable trades. Again, if you get to that 100% initial risk line at 32.67, you can move the stop to break even there. And again, you got to make sure you have the risk capital to do a trade like this on the weekly chart, and don't risk more than 2% on any one of these trades of your risk capital, and then size your position accordingly. Alright, let's take a look at oil, because I think oil did get a little movement from our, let's see, yeah, it did a little bit anyway. Here was that TS1. Remember, I didn't know, we'll see if this how this plays out, but get back above that 89.50. Here's a target of 100.44 there. We'll see if this, again, oil's been in this $80 to $110 channel for a while here. Even when it did spike outside of that range, up above 118, you see how it got smacked back down inside that range, and it's been bouncing over. Here's your $80 level here, quite a lot. So, and then once it reaches that $110 level, it's been taken back down to that $80 level. So this, wasn't sure, well, still not sure this will hold. We'll see if it makes a move maybe to the 100% initial risk line and rolls back over. If that's a situation, if you happen to be long there, you get your stop to break even there at that point. But because it could test that $80 level again, it's similar to like we showed last time here, where it hit the $80 level, rallied, came back into 80 before it took off. Could get something similar here, or we could get to the target. We could go to 110 from here. We'll see how things shape up. The momentum on the weekly chart is still actually pretty neutral to the downside. So we'll see what happens with this. I guess we'll leave it there. We'll come back and see again. Watch those major markets, the indices, and see how they are able to play out to the upside, if the S&P can bring things up or not, and things kind of get dragged down by the NQ or the YM if they're not able to take out those prior highs, and we get a rollover. We could see a correction at that point. So stay tuned, and we'll see. Come back next week and check things again. Take care.